Hi, this is Marcus here and
Dennis.
And welcome to the chart of the week. And last week we started talking about oil. And wow, look what's happened to oil. I told you, absolutely amazing. Nothing's happened, right?
Nothing has happened. No, it's just moved horizontal.
Nothing at all has happened. But that's fine, because this is an investment. So we are expecting, remember, trading days to weeks, but investments months to years. Which one's better, do you think? Trading or investing?
Both.
Both? Wow, you kind of have a millionaire mindset, don't you?
Maybe always both. I mean,
it's always both, guys. You got to do both. All right, so here we go. So if that, but this, I tell you what the good news is, because if we would have said, look, we're up and we've made our 15% by now, then you wouldn't be able to get in, right? So you have an opportunity. This is not an investment advice. This is just what I've done. I'm in at the same price. Actually, you could, no, it is at, isn't it? It's exactly at the same price. Is this like really the price?
Yeah, this is really the price, 10.50. So it's slightly lower than it's fallen more than 20%.
So that means that you could actually get in at a better price than me right now.
Yeah, absolutely. And better than me actually in my investment.
Obviously, better than you. Yeah. But that's fantastic. So and remember, we're going to be getting in again at around 9.50. That's what we're going to be doing. We're just following our strategy, which is the VCA strategy, you know, oil. Again, it doesn't happen every day, but when it comes down, we do need to take advantage of that. So this is an ETF in the States called USO, and you'd probably in the UK have to look at something which is in the UK if you can't get this on your broker. The one that I use is CRUD, C-R-U-D, but please do your own research. The way to look at it is to look at an ETF, an exchange traded fund, that has the most volume. Why do I need a lot of volume?
Because, well, I guess it's a couple of reasons. Because you want to make sure that there's a lot of people buying and selling. There's liquid.
Right, so why is that important though? Because when you're buying...
Yeah, because if it's not liquid, so if you're buying and it's not liquid, you can get a very different price, which you call a spread, for example.
And you can get slippage and things like that.
Yeah, exactly.
But what's important is that you want to be able to get out of something that you're buying, right? And so I want the one with the most volume because I want to be able to get out. I also don't want the thing to go bust. I don't want the company to, you know, so I need a lot to be a lot of buying and selling. Then I know that they're making quite a bit of...
What is the lowest volume you're looking for? Around the minimum?
On an ETF, difficult to say. But, you know, I just want, really, in reality, I just want there to be loads of trades going on. So maybe 200,000.
Exactly.
On a daily basis.
That's a good amount. I agree. So if you see something with like 100 in volume, then don't go for it. And you will see it on the chart as well. So oil, I think, and I guess why we like it so much is because it really cannot go to zero in the foreseeable future. So I'm pretty sure in a couple of weeks, we will have made money on this. Could be, or in a couple of months.
Oh, you're like that guy who said that if Bitcoin doesn't go up to 500,000 within 3 years, I'm going to eat my own penis. I wouldn't say stuff like that. You are that guy.
Not really, but I think we will in the foreseeable future.
What if we don't? What are you going to do? What are you going to eat? What are you going to chomp off?
Why do I need to do that?
Well, you don't.
Chomp off.
Chomp off, yeah. Do you know what that means?
Yeah, I know what that means.
So look, here's the thing, right? We don't know how long it's going to take. I don't really care as long as it does.
Yeah,
and you know, because you can't have a crystal ball that tells you, and we actually want this to go down because so we can buy some more at a lower price. That's what we're looking for. So we'll keep looking at it. Do we have another chart?
We do have another chart. So one we're looking to get into right now is this one. This is
Genesco.
Yeah, Genesco. Yeah. So this is from our famous Buffalo strategy, or your famous Buffalo strategy.
Yeah.
Yeah. So what we're looking to do here, we have a nice upward trend.
Nice.
So it's on the support line at the moment. So we have placed an order on this to see what happens if we see some buying power coming up, and we're placing an order. So we need it to move in our direction before we enter.
So a stop order.
Stop order, exactly. Okay. And then we're going to see what happens, right? So
but you need a stop loss as well.
Oh yeah.
By the way, this is trading, right? The chart before was investing. There's no stop loss. In fact, if it goes down, we want to buy some more. Here, if it goes down, we are out. Why? Because there are two golden rules of trading, and one of them is cut your losses. We're going to risk 1% of our entire portfolio. So the calculation that we have to do is we have to make sure that by the time it hits our stop loss, we have only lost 1% of our entire portfolio.
Yeah, so what we can see here, we're risking this much, the red, so I don't know if you can see it, but we're risking this in order to make actually 4 times as much on this.
This is 4 times as much?
It is 4
That's
times
an optical illusion. It doesn't look like it.
It doesn't, but it's 4.25.
Wow, 4.25.
Yeah, I
wow.
agree with you. That doesn't look like it at all, but it is actually, which is good. So then, for every $1 we're risking, we could potentially make 4.
Oh,
we
like
don't know what's going to happen. We never know. Like Marcus said, we don't have a crystal
And what's
ball.
interesting is it's an upward trend. So actually, by the time it gets to there, it could actually be a lot higher than that.
Yeah.
So at what stage would you start moving your stop loss up?
And before I answer that, I just want to say I'm happy to be a little bit more conservative because we see it could break out of this as well. So I'm happy to make 5, 6, 7, 8. We don't know how much we're going to make.
You know, it's funny you should say that because actually I am seeing, I know this is back in time, but it's really not that far. It's only a year or so. I am seeing a lot of resistance at around the 44 mark.
Yeah.
So this might just be a 3-to-1, which is fine. But it might just be a 3-to-1.
Yeah, so I would, when I'm up 2-to-1, I'm going to move my stop loss to break even. So I'm in a risk-free trade.
Then you can't lose money, but you could break even. I like.
However, I don't want to move it too close because I want to make sure I leave it some room to move.
I agree.
Because I think a lot of people do that, and it's normal, right? When you're in profit, you want to make sure you don't lose that profit because you might have seen it happening on some other ones.
Is this like the biotech sector or something? Because the reason I asked, look at these moves here. I mean, that's like a 10% move in one day down, and then 7 or 8% move up. Wow! Look at these big moves.
I know it's during earnings, which is we avoid earnings, which is a good reason for it.
Is there no earning coming up?
It is, but it's more than a month away, in the middle of March. So it's more than a month. So I think it's plenty of time for it to go up. But however, if I'm in this, I'm getting close to earnings, and I see this have happened before. I don't know if it's going to move up and down, and I don't want to do gambling. So then I will close my position, and then we'll see what happens. I don't want to be in.
It's insane.
It is. It would be good, but and the earnings were really good here, and they're projected to be good as well. So it seems like it's a good and growing company. So I think
yes, but that doesn't mean it's necessarily going to go up because if the earnings are projected to be good and then they're not, whoa, you can see a gap going down. That's why it's so important to have that stop loss. And can I just say, if it does do things like that,
I'm happy, but we'll see.
If it goes up, if it goes down, you're not going to be so happy because it's going to go past your stop loss. But the point is that it's part of a trading system with rules. Where to get in, where to get out with a loss, where to get out with a profit. So he's already putting his line on where he thinks it's going to go. And notice he knows already where to get out with a loss, where to get out with a profit, how much money to invest and where to invest, and those are the 4 parts of any trading system.
Yeah, exactly, and we don't want to leave anything to gambling, so earnings is out of the question for us.
So we'll have a look at this one in a couple of weeks and see how that played out.
And then we have another one here we're looking at the moment.
That is quite aggressively moving up.
It is quite aggressively moving up, I do agree with you. So, so we're looking at this at the moment. Earnings have already been, so it's a long time until next earnings. So
that could mean that you could be making money fairly fast on this one, or you lose 1%.
Yeah, we never know, right?
No, you never know.
As long as we can make more than every time we lose, 3 times as much at least, then we can have losers as well. There's no problem.
This is a really interesting one. So where would you get in? Where would you put your stop loss?
So this, if we zoom in, I would put my entry order on the candle.
Oh, that's interesting.
That we have this hammer.
One here? Why not this one here?
Yeah, this one here. I'm trying to put.
Oh, okay.
So this one, yeah,
exactly.
So the hammer there, right?
Yeah.
Because it did go up a little bit, but
not really, enough to get you in.
Yeah, exactly.
Oh, I don't know about that, dude.
Oh, yeah, it would have, but I didn't put it on this one. So I'm looking at it now for the first time. But otherwise, then yes, I would have been in here.
So you could get in now, just with a.
Yeah,
because
probably.
you should have been in that one.
Yeah.
Where would you put your stop loss?
I would put it under this one.
Do you know what? That's really interesting because this one is so close to it and there's nothing else. I would probably put it under this one.
Yeah.
Just because it's there and the market's looking at that.
Yeah. Agreed.
And
Yeah,
but then we gotta make sure if this is your one lot, we gotta make sure 1, 2.
It's a very close call.
Risk reward ratios need to be at least 3 to 1 or more. Otherwise, you will not make money over the medium to long term. So that's a good one. So that's Apollo Global Management. Let's have a look at that. Any more? That's 3. It's supposed to be chart of the week, and we do charts of the week.
Yeah, it's a good one.
So that's good.
So then we have, we could do some follow-ups. And the only,
follow-up. Come on.
The only reason I want to highlight this, so we did look at this when we were here. We said I was going to put the stop loss around this level because that was more than a 3 to 1.
So you'd already gotten in, you'd made money?
Exactly. We got in down here. So that's what we discussed the previous week. But one thing I want to point out is if you move your stop loss too closely, this might happen, right? We never know, but so you need to be careful, right? I was happy with a 3 to 1.
Yeah, to be honest, once it's up there, what do you expect? Because you'd expect for it to come back down. So
I did, right?
Yeah.
So that was an interesting one, and then we looked at this as well.
Yes.
And we're out of this one as well. So this also dropped down. So it went up to our take profit. We got the stop loss up.
Good.
So I put it, it went up so fast,
That's
right?
great.
So I just put my stop loss
basically 3 days is all it took.
I know.
Well, okay, maybe not. So 1, 2, 3, 4, 5, 6. So probably in like a week of trading and 1 day, wow, that's
made
cool.
it around 7%.
You got to show us somewhere you've made some losses as well.
Yeah, okay. Well, actually, it's funny you'd say that. We have a couple. So this one was almost a loss. It was not a loss because
Okay.
we're going to show you one we had. But just to make a point out of this, because this, we put an order in, but it just kept going up. And since...
In order to do what?
In order for it to go down.
You mean sell short?
Just sell short.
But why were you pointing there and saying an order to put in? Well, you wouldn't get in until then.
No, exactly, up here. We put it on this...
but then you wouldn't because it went out of the range, so therefore it's no longer relevant.
So we cancelled
and then we cancelled it, Now, we could, I guess, have put it just below there, but then it went back up again, so we're out again. So this one, dodgy.
It's dodgy, and usually you see that the previous resistance turns into support.
Yeah.
So we'll see what happens. It's a no-go. So it was almost a loss. We did on this one, however...
here we go.
Here we go, right? So it was a good buffalo. Looking for the losses, that's good. So we got in here, right? Started to go in our direction. So we put order in on this. And then it started to go in our direction. And then it broke down
Just
basically.
barely, right? It just barely. Just got us in.
Yeah.
And immediately turned down.
And that might happen, right? But we only lose 1%. Which
1%.
is a good thing.
Absolutely. In order to make at least 3. So you can have more losses than gains. You're having more gains, but actually you can have more losses and it'll still
I'm
be
happy to have losses because I know for every loss I make, I'm getting closer to a win. And it's donating money to the market.
I love it. So he's happy about losses. Now that's a certain mindset that you need to have in order to be a successful trader. Because then it doesn't matter because you have a system, you have a certain amount of losses. And again, you can have more losses than wins and still make money when you have the risk-reward ratio working for you.
Very good.
Very good.
Yeah.
So I hope you enjoyed that. I hope that you learned something from that. I hope you're going to take action. We're not allowed to say get into oil, so we're not going to say that. So if you like that, hit the like button and remember to subscribe to this channel so that we can keep sending you what it is that we're investing in and that you learn more and build up that muscle. Okay? Looking forward to seeing what happens to these charts in the next couple of weeks. See you next time.